if you're thinking about buying a property, should you buy it in your personal name with a mortgage, rent it out? Should you buy it with a buy-to-let mortgage in your personal name and rent it out? Should you buy it through a company and rent it out? Or should you do some other strategy? In this video, we're going to focus on buy-to-lets, and we're going to look at the three types of mortgages. We're going to look at the personal mortgage, we're going to look at the buy-to-let mortgage in the personal name, and we're going to look at the buy-to-let mortgage in a company. We're going to compare and contrast them. I'm going to show you the amount of deposits needed for each one, how many you can have, and all the pros and cons. So hope you enjoy. As always, I have opened a blank spreadsheet, so let's set out what we are trying to achieve with this video. This is a rough setup of how it looks. So we have a personal mortgage where it is a mortgage to buy your personal home. So this is for you to buy a place to live in. Always remember that. The deposit can be as low as 5% and up to whatever you want it to be, but typically 10% deposit is the norm for a personal mortgage. Interest rates, well, interest rates, we should just have a look at it, shouldn't we? Realistically speaking, personal mortgage will be the lowest interest rate, buy-to-let mortgage will be slightly higher, and buy-to-let mortgage for a limited company will be slightly higher. Number of lenders, also you have a lot more for the personal mortgage, and they're a bit more specialized and there's less of them for the buy-to-let ones. But as the market adapts, so do the lenders, so things change. But interest rate, I would just put it as simple as if you can get a personal mortgage at 5%, you can get a buy-to-let mortgage at 6%, and then maybe the buy-to-let mortgage for the limited company will be 6.8%. This is very approximate because it will depend on the broker, depend on the fees, etc., etc. But as a rule of thumb, the cheapest one will be personal mortgage, then the buy-to-let mortgage in your personal name, and then the buy-to-let mortgage in the company. But it's not a massive amount. Some people are scared that the personal mortgage should be 5%, but the buy-to-let mortgage is going to be 20% interest. That's just not the case. It is higher, but it's very manageable, and you can really calculate that and put that into your model when you're looking to invest. Both buy-to-let mortgage and buy-to-let mortgage for company, you're looking at a typical 25% deposit. The reason for that is because the bank wants to de-risk their assets. So they are more happy giving you more money towards a personal home. So if you buy it for 100k, they will give you 90k. 10,000 can be your own money. There's a lot of government support to get people on the property ladder, and the banks are more willing to take the risk of a 10% deposit. So it means that the property has to decrease by more than 10% before it gets to the point where if the people stop paying and the property is sold, bank then makes a loss. They don't want to make a loss, so they've got that 10% buffer. When it gets to buy-to-let, it's understandable. It's more risky. With buy-to-let, people buy at huge discounts. Sometimes people overpay. There's all of the models and calculations and how much rent are they gonna get, all those things. The bank is a bit more wary of, and they're thinking, wow, maybe I'm gonna allow myself more buffer so that the bank only owns 75% of the property. So there has to be a bigger decrease in the price of the property before it gets to the point where the bank loses money. So that's why it's 25%. So 10% personal, 25% buy-to-let for personal name. Personal name. And the same for limited company. Permissions for a personal mortgage is your home, and that's it. For a buy-to-let mortgage is a buy-to-let. I know it sounds very obvious and you'll be thinking, why the hell are you saying that? But this is quite important. You have conditions and permissions that come within any mortgage, and if you breach them and you get somehow they find out, you can be in a lot of trouble. So they can repossess the property, they can give you a warning, they can increase your interest rate. There's all the different things, but you don't want to be messing with the mortgage companies and annoy them. You want to be honest and open with them, which is why if you get a personal mortgage, just get it for your home. Don't get a personal mortgage for a buy-to-let, because it's better not to break the rules. There is a bit of a temporary thing, so you can buy a home and then there could be something that happens and you have to rent that home for a temporary time period, and you can ask for permission to rent it for a certain time period. But if you try to mess around with it and take advantage, you will probably be found out and it's not worth it. So remember, personal mortgage is for your own home. A buy-to-let mortgage is for a buy-to-let home. Again, it can't even be your home, so you shouldn't even be taking a buy-to-let mortgage to live in a property yourself. It's purely for a buy-to-let. Even if you do want to do other investments, for example, if you need money and you want to do a flip, you think, well, just take a buy-to-let mortgage, doesn't matter, and then after a year I'll flip it. No, don't do that. Once you do it a few times, the mortgage companies will catch on that you're not using it for the intended purpose. They will blacklist you. They will make it more difficult for you in the future. Just don't do it. So buy-to-let mortgage is for buying a property and then renting it long term. Yes, there could be some circumstances that means you have to sell it or whatever else, but try to be honest, and when you are buying a property and you truly have an intention of renting out for a long time, get that mortgage. If it's for something else, try to find some other financing. Could be cash, could be joint ventures, investments, could be bridging, whatever it is. I'll speak about it in the other videos. Maximum properties with a personal mortgage, it's not fully defined, but really it's about your home. So maybe it's the case where you have a home, which is a maximum of one property, obviously, and then something happens with your work and you have to go to another place for a few years and you want to buy a place there. So you end up leaving your place and buying a new one. You're going to temporarily rent your place, so you have the personal mortgage with a permission, if they give you permission, and you can get another mortgage for your second home potentially. So there could be little situations like that, but really 1 to 2 is the max. 1 or 2 is the maximum that you can have for the personal mortgages. If you have a 25 personal mortgages, it's just not going to happen. Once you get past a certain number, they will catch that you keep taking properties out and you're doing mortgage fraud, and you don't want to go down that path. Buy-to-let mortgage for both the personal name and limited company. Okay, so in terms of maximum number of properties, for the personal mortgage, 1 or 2. For the buy-to-let mortgage in the personal name, it's in theory unlimited, but in reality, you're going to be limited by the lender criteria. A lot of the time, they will look at your portfolio and say, okay, if a few of them, the tenant moves out, for example, will the rent still be covered by the other properties that are there, or do you have a very high income that can cover the mortgages? And if yes, they'll give it to you, and if not, they will not give it to you. Some of them will just say, if you are of a certain size or you have so many mortgages with us, you cannot take any more because they only want to leverage up to a certain point. So lender criteria is the key thing. And with a limited company, it is exactly the same. So you can have as many as you want, but you need to look at the company account and the company situation. So how many mortgages does the company have? Is the company making good profit? Have they got any other liabilities that need to be serviced? The lenders will look at that whole picture and then make a decision. So really, my preference is limited company, but for different people, it is different. Okay, so in terms of tax, for the personal mortgage, it's not really applicable. Personal mortgage is for you to buy a home to live in. You're not looking to make any money on it, so there's no tax implications as such. For a buy-to-let mortgage in your personal name, the interest is only partially a deductible expense, so you can only use part of that interest as an expense. So you can end up, if you're a higher rate taxpayer, you can end up paying a stupid amount of tax and it can be not worth it. However, if you are not currently taking any income from anywhere and rent is your only income, then it might be very useful to do it this way. So it just depends on your situation. Limited company, my preference, and that is tax efficient if you're not taking a salary and reinvesting, because then you're getting the rent in, you're taking off the mortgage interest, you're capitalizing the capital repayments of the mortgage, and then anything extra that's left over is taxed at corporation tax rate of between 19 and 25%, 19% for quite a while until you scale up to a big level. and then whatever is left over, you can then reinvest into more properties, into renovations, and you can kind of keep that money working. So hopefully that gives you an idea of the tax implication, but that's a whole new video on its own. All right, so I think we've covered pretty much everything. That's the 3 types of mortgages I wanted to talk about. Really, for growth and for business and for properties, limited companies, currently the most lucrative way of doing it. But in some situations, especially where the income is low, buy-to-let mortgage in the personal name can also work. Another thing you need to keep in mind is that if you already have property or properties in your personal name, you want to then change the structure to limited company, it can be expensive. Depending on the value of your properties, you might have to pay additional dwelling supplement in Scotland and in England. You have to pay solicitor fees. You have to pay potential capital appreciation tax. So if you are looking to move your properties into a limited company, just have a think about the tax implication, because it could cost you a lot of money to make that change. It might be worth it, it might not be, but that analysis needs to be done. Okay, well, hopefully that gave you an understanding of personal mortgages, buy-to-let mortgages of 2 different types, and I'm looking forward to seeing you in the next video.